What is going on, everybody? I know I got a couple people in here already, so welcome to the people that are here. Go ahead and drop in the chat who's here right now. Want to see who we got going on the live. Hope everybody is having a good Saturday and off to a good day so far. Let me know who is here. Drop in the chat. Say I'm here in the chat for the people that are watching. I know we got a couple right now. All right, Melina, welcome, welcome, welcome. We got some people coming in. So today is gonna be a banger. A lot of people have been asking me about a lot of the topics that we're gonna talk about here today, and I wanna talk about how financial literacy and financial independence ties into real estate investing. How you can take a lot of these strategies that you know uh, maybe they've been thought of as myths. They've been thought of as things that people just they throw to the side, but it's actually key elements that are going to help you be able to advance in a business and in real estate investing, wholesaling, whatever it is that you're doing. So first, I wanna talk about um, why they don't want us to know about credit. um, Go ahead and hit that in the comments for the people that are here right now. Why they don't want us to know about credit. I'm sure a lot of people have either seen or they have had family members tell them, "Oh, credit is bad. Credit is something that is irrelevant." They think it's something that you use for emergency purposes only, stuff like that. I know we've all heard these things before in the past. So if you have heard that, is definitely okay. I guarantee you, if you had a parent or if your grandparents have told you these things in the past, they themselves have probably heard it from um I'm sure they probably heard it from other people that up the chain in their family, their parents, their grandparents, things like that. Lena, I see what you're saying. To keep the structure of power away from certain minorities. Yes, that's exactly what I'm talking about, and I'm going to get into that here in a second. But these are the type of things that we've been taught. It's been instilled in our heads that credit is bad, credit is not good. These are the things that we've been told. And even to take it a step further, for the people that have went to college, right? I know all the people that have went to college, you had those people, or even those credit card companies, those lenders that you're 18 and they just handing out credit cards, trying to give you a credit card, right? And so at a that age, you don't know, you're not aware of what a credit card is, what type of damage you could really do. So we've always been taught that a credit card is just, it might have been free money, or you might think, oh, like, hey, this is just money I could just spend, and I don't got to worry about it anymore. And then those people that took advantage of those credit cards at that time, well, guess what? They probably racked up a lot of debt. Now their credit is bad because they didn't know, right? They didn't have a full understanding of what a credit card is, and how it's really supposed to help you. So these are the type of things that people have went through. You can hit in the comments if you were a college student, if you were a person that went to college, and you know exactly what I'm talking about. You got a credit card when you were 18, 19, 20, 21, whichever age it was, and you didn't know what it was. Like, you just thought, hey, this is free money, right? And that's it, right? That's all you thought. So hit in the comments if that's you. But I want to even take it a step further, right? Misuse of credit made a precautionary tale, right? So true. So true. So true. So I want to take it a step further, right? Let's talk about a big elephant in the room right now in the United States of America right now: student loan debt. You can hit in the comments if you have it. It's okay. Doesn't matter if you do or if you don't. But student loan debt, right? And I'm going to tie all this into investing in real estate, and for the people that have businesses looking for capital. Don't worry, I'm going to tie all this in, but you got to understand these key elements first. So, talking about student loan debt, right? Why is it, and these are the questions that we have to ask ourselves. Why is it that student loan debt, out of all debt imaginable, why is that debt that you cannot get rid of, right? Why is student loan debt just is stuck with you forever, right? Regardless if you file BK, regardless of if you anything. Like, literally the only two ways you can get out of student loan debt is if there was some type of negligence with your school, which is hard to prove, or your school wasn't accredited, or they lost accreditation, which is something that's new. You can get out of your student loan debt and get it forgiven, or wiped out, right? That's one way. The second way is death, right? That's the second most common way that you get out of student loan debt. And the third is if you had some type of unforeseen illness, or basically you had a severe disability. You're basically you're a vegetable, so to speak, and you can get out of your student loan debt that way. But those are the three main things or reasons why how you can get out of student loan debt. So anybody can hit me in the comments, and you can and say what this is. What is the American dream? What have we all been told coming up? Go to school, get a college degree, go get a job, right? That's what we've all been taught. That's what the American dream is. Go get a job, go to college, and that's what we've been taught, right? So think about it. You're going you're going to go to college. Most people don't have the luxury of getting this a scholarship, or maybe they don't have rich parents. They don't come from a well-off family where they can have their college paid for, right? So that's most of America. So if that's not you, well, guess what? You have to go take out these crazy loans, right? You got to go take out 50K, 80K, 120K, 150K of debt that you have to get into so that you can go pursue this degree. Now think about this for a second. Think about how crazy this is. You're a 18-year-old, a 17-year-old, a 19-year-old, a 20-year-old, whatever the age is, very young, and you're tasked with taking out tremendous amounts of debt. Think about that. That is crazy in itself, that you have to be in a position at 18 or 19 and take out that much debt to go to school, right? And so for most people, right, that are in this position, they are going for degrees maybe they don't know all the way, or maybe they're just, they're kind of winging it. They're young, they don't know, right? And so they're going to school, racking up all this type of debt to get a job that maybe is going to pay them, hopefully, fingers crossed, that's going to pay them maybe 40K, 50K, 60K, right? That's what most people go to school for and get degrees for. It's for jobs like that, and they rack up tremendous amounts of debt. And we know what's going on right now in current times. What's going on right now is, hey, people are not able to get these jobs that they've went to school and racked up all this debt to get, right? That's what's going on right now. People are not able to get these jobs. So guess what? What happens now? Well, that decision that we made at 18, 19, or 20, now we've gotten out of college, right? We've got our 4-year degree, our BA, our associates, whatever. But guess what? Now we're not even able to get the job that we get, or we went to school to get. We can't even get that job. Melina, mental stress. Yes, that's 100% correct. We cannot even get the job that we went to school for in the first place, right? So now we're not able to get that job. So we still have this massive amounts of student loan debt that we still have to pay back, regardless of whether we get a job or not, right? And so after you get out of school, well, guess what? In a year or 2 years, whatever, that clock starts ticking, and now you have to pay that back. Oh, well, guess what? If you're not able to pay that back, well, now the interest is ticking on top of that as well. That's the American dream. That's what we've been sold on is go to school, get a degree, right? Rack up all this debt, fingers crossed, hope that it works out. That's what we've been taught. That's how people, that's the first really chance that people get to start to use credit. That's hit me in the comments if that's you, if that's happened to you, know what I'm talking about, if I'm making sense. That's usually people's first exposure to credit, right? So now I want to take it a step further. Why do you think in school, general education, kindergarten up to 12 to the 12th grade, why are we not taught about financial literacy in school? Right? We're taught about all these arithmetic stuff, algebra, calculus, all this type of stuff, but we're not taught about basic financial literacy, how to manage our money, how to file taxes, right? We're not taught any of this stuff in school. Why? Why is that? These are the questions that we have to answer. Why are we not taught this stuff? Right? So now we get to 25, 30, whatever the age is now, and now we're figuring out like all this stuff that we didn't know when we came up. But guess what? Now we've made all these mistakes in the past and no fault of our own, and we're playing catch up now, right? So it's time out for us to living in this old way. The information is there. We just have to be able to seek it and learn and be willing to understand how money works and how credit works. So, like I said, let me know in the comments if this is making a lot of sense to you right now. And now I want to go to leverage, right? Because leverage is a key element when we're talking about businesses. We're talking about if you're into real estate. I know I got a lot of real estate people here. DeAndre, I love to see you, man. I'm glad you're in here. But a lot of people are looking to get to business credit, right? And real estate investing, wholesaling, whatever your vehicle is for making money, right? We have to first talk about leverage. We have to understand leverage. For the people that are in my mentorship group, you know what I'm talking about. We talk about this all the time. But leverage. So why do the most successful companies, this is the question that you have to ask yourself, why does the most successful people or the successful companies never use their own money? Think about it. Why do they ever not use their own money? They're always leveraging other people's money. I call this OPM, right? They're always leveraging OPM, right? So we might see this stuff in a large scale and think, oh well, there's some big corporation, there's some big company, or they're rich, they can do that. Well, no, the average person can do this too, right? The average person can do this, right? Exactly, exactly. Why spend your own money when you can spend somebody else's? This is a key point, right? Right. So this is not something that only these big companies and these big corporations can do. We can do this too as individuals, right? We can learn to do this too, right? So first we have to understand, okay, well, this is a thing, right? This is a thing that the everyday person can do. It's accessible to us, right? It's accessible. That's the first thing that we have to learn. And so once we're able to understand that, now we can start to expand our mind and start to play catch up. If you are playing catch up, if you're watching this and you're 18, you're in prime position right now. But for the people that are not, it's never too late, right? We live in a time where you can turn around and make a U-turn and change the course of your life like that. You just have to be willing to do it and put the work in it and be consistent about it, right? So leverage, like I said, these top companies, right? And for my real estate people, right? You know this to be true. The top real estate investors, right? They leverage credit. Look up any of your favorite real estate investors that you follow or mentors or whatever. They leverage other people's money. I guarantee you. Guarantee you. This is what they do, right? So we have to get out of the mindset of credit is bad, right? We have to get out of that mindset of credit is bad, right? Put in the comments, get out of the mindset, right? We have to get out of the mindset of credit is bad, right? Right? Why have we been conditioned to think credit is bad, right? That's another question we have to ask ourselves. Why have we been conditioned to think that, right? Why? Because for the masses, right? Credit is just a way to look rich. That's one reason. Credit is a way to use for emergencies, right? We've been taught to do that. Only use your credit cards for emergencies, right? That's what we've been taught. Melina, you're 100% correct. It could be because of your environment. Can't blame it on. You don't know if you don't know, right? I tell people all the time, you don't know what you don't know, right? So all these reasons as to why, we've been taught these things. So college debt is crippling America. It's a big thing that's going on right now, right? We know the current administration, they're doing some type of student loan forgiveness, right? It's only $10,000, so that's not much, but these are the things that are going on right now, right? So why are you trying, from our real estate people, right? Why are you trying to use your own money if you're trying to get into real estate? If you are, why are you trying to use your own money? It could be because you don't know anything else, right? And this could be for any business owner as well. This applies to you. And people in my mentorship group, they know what I'm saying here because we've done plenty of breakdowns about this. But why it's so bad to use your own money, right? And we can get into the legalities of why this is a horrible idea. But starting with just simple concepts, why would a person want to use their own money, right, when they can leverage other people's money? And what I mean by that is, when I said leverage other people's money, we're specifically talking about credit. We're specifically talking about credit and being able to start to leverage your personal credit to get to business credit. So you might say, all right, LaJuan, you've been hammering this over our head about, this leverage thing. And okay, so what exactly is it? Right. So first, it starts with your personal credit, right? And we're gonna get down to exactly how you're supposed to use a credit card. In my opinion, everybody in my group knows this, but credit cards are the easiest way to learn to leverage credit. Easiest way. And you get a lot back. You get a lot of benefits back from doing it. So hit in the comments right now for the people that are watching. Hit in the comments right now if you have a credit card at the moment. Let me know in the comments if you do. So if you have a credit card, right, what do you use it on? Do you use it on expenses? Do you use it on just buying random stuff? Do you use it on um, emergencies only? Right? Let me know. What do you use your credit cards for? If you have one or two or three, however many, but what do you use these credit cards for that you have, if you have them? Okay, recurring bills. That's a good start right there, right? All of the above. Okay. So credit cards. This is what we have to do. This is what we have to start doing to okay, DeAndre, gas, right? So this is what we have to start doing to start to learn how to leverage, right? So I'm sure everybody likes to travel, and this is how you kind of reel people in that want to start learning how to leverage their credit. So first, it starts on the personal side. So if you have a credit card, this is what I want you to do, right? I want you to really sit down and go over your entire monthly expenses, right? So top to bottom, right? So from rent or mortgage to car notes to utilities, whatever, your kids daycare, soccer practice, whatever, right? Every little thing, go down and pencil in what is it that you spend money on monthly, right? Get all those expenses written down, and you have to know that. Let me know in the comments if you do that already. If you do that, great. If you don't, it's okay. Perfect time to start. No time like the present, right? So Do that. Get your expenses down. Know exactly what's coming out of your account every single month, right? So, okay, Melina, you're on the right track. You say you do that monthly. That's good. So, right, and that's okay if you don't do it. It's perfectly fine. Like I said, perfect time to start. Go through, see exactly what you spend money on every single month. Now, for the people that don't do this, you will be surprised at where your money's going. I promise you. First time I did it, I was too, right? You're gonna be surprised at where you're spending money at. It's gonna be a shocker. And so, if you're trying to say, for instance, if you're trying to save money for something, I guarantee you there's bare minimum probably three, if not $500 at the minimum of fat in your monthly budget that you can probably cut out that you don't realize you're spending money on. Guarantee it. Did you say $50 on lunch, one meal for dinner? Look, yeah, simple stuff like that, right? Right. So you might be like, I don't have any extra money, right? But I guarantee you, this simple exercise that you can do will work. I promise you. And if you need like a tool to do this, let me know. I will reach out to you and I'll send you a Excel. It's already built, right? My people in my mentorship group have this, but it's an Excel sheet and it's a calculator and it's already charted down for you, right? So all you have to do is plug in the numbers, right, for each category, and then it's going to calculate the numbers for you and show you exactly what the expense is, right? And then all you have to do is go at the top and put in your how much you make a month, and then it's going to calculate it all for you. So let me know in the comments if you want that. I can send that over to you. But this exercise right here is so crucial because a lot of people don't know what they spend money on, and this translates to business as well, right? This is something that you need to know for your business as well. So for the people that think this doesn't translate, yes, it does, because you got to know you got to know where your money is going, especially in business. It's even more prominent in that arena, right? So these are strategies and tactics and principles that you need to start now if you don't have a business or you're looking to start a business, right? So you can start this now, right? So like I said, let me know in the comments if you want that. I can send that to you. But um, this exercise is key. So now that you know where you spend money on, we're gonna tie this to leverage. So now that you know what you can spend money on or where your money is going, so now you sit back and you think, okay, you say, hey, well, and we'll use this for example purposes here. Say you spend I don't know, gas is high right now. Say you spend $300 on gas a month, right? So if you know that, you say, hey, well, I know I spend $300 a month on gas right now. What card can I get that I can maximize this spend, right? So we need to get in the mindset of using credit cards as a middleman, right? People in my mentorship group know this. No interest gain. I preach this, right? We're not paying these credit card companies no interest whatsoever. We don't believe in that, right? So for the people that are watching it, you need to start to learn to adapt this mindset of not paying interest, right? And that's a deep thing. It's, that's statement cutoff dates is super deep, but we need to get in the habit of not paying any interest on our credit cards whatsoever, right? That there you go, Melina. 0%. Gang, right. So literally, this is what we want to learn to do, right? Not pay a dime of interest, but we're abstracting all the value back, right? Credit card companies are happy. I've had people tell me this. Well, isn't that how credit card companies make money? Well, no. So credit card companies make money two ways, right? And either of these two methods they're fine with. So the first way they make money off of, the most common way, is yes, interest, right? So they're banking on you having a statement, right, and you paying that off over time. That's how most people use credit cards, 90% of America, right? So that's the prime way they want to get money. But the other way, the second way, which a lot of people don't know about, is merchant fees. So, and if you have a merchant account, or if you have a business, maybe you do e-commerce or whatever, you know what I'm talking about already. But for the people that don't, What that essentially is so anytime you go to a place of business, doesn't matter what it is, could be a gas station, a store, whatever, whatever you're using, right? That POS system, whatever you're using to charge your card, that is a merchant. So basically, the credit card companies, they charge a percentage to that business owner to be able to process that payment. So, for Visa it's like 2%, American Express is like, 4%. And that scale ranges depending on the transaction, right? So that is another way that the credit card companies make money. So they're totally fine making money that way. So think about it. You only want them to be making money off of you one way: merchant fees. That's it. Forget the interest, because that does you no good. Merchant fees, they can have that. That's totally fine because you're getting something in return. And this is what I want people to start understanding, right? So back to what I was saying, the gas, right? So now that we understand the merchant fee thing, so now that $300, let's say we go get a car that can maximize this gas spend. I'll give you guys a freebie, the City Custom Cash, right? Perfect card to do this for. It has rotating categories based on monthly spend, right? So that category can rotate based on your highest spending category for that particular statement cycle. That's how that card works. I have a video on it on my channel if you want to learn more. It's called the City Trifecta. But that card, we'll use that for an example, right? So it's 5%. So you get a card like that, and you go ahead and you charge that. You just use it for gas, right? And that's a no annual fee card, by the way, too. So it doesn't cost you anything to have it, right? You go get that card. Now you're using that card to you're getting 5% back on that $300. So guess what? You're spending that $300 anyway, regardless. You have to get gas, right? So what we've been taught, or what we're used to doing, is maybe using our debit card, right? Raise your hand if you use your debit card for a lot of stuff. Um, or put in the comments. So you might be used to using your debit card for stuff like this, right? So take that away. Add the middleman. The middleman is the credit card company, right? So add them in. Use that for that charge that you have to charge anyway, right? And guess what? Now you are getting 5% back for something that you had to spend money on anyway, right? And so now what we do from there on out is, guess what? We're not waiting 3 months to pay that. Soon as that transaction posts, and this is what I tell people when they're starting to apply these concepts, get in the habit when you're first starting off of paying your credit card off every single week. So whatever you've charged, and say you're beginning, you're starting off with just basic spending. So maybe just gas and groceries, or just gas, or just groceries, whatever, cell phone bill, anything like that. If you're just starting off like that, pay it off every single week. Get in the habit of paying it off. It should make your, I want to get you to the point where it makes your stomach turn that you owe them any money. Right? This is the habit I want you to get into. Like, it makes your stomach turn that you have a balance, right? And so get into the habit of paying that every single week. And so what that's going to do is that that's not only going to condition you to be able to do that now without somebody telling you. That's one. But two, what's going to happen is, now you get to the end of the statement. When the statement is about to close, you don't have a balance. So guess what? You don't have any interest. You're getting that cash back for the money that you're spending. The credit card company is happy because you're paying your stuff on time, and they're still making money off merchant fees. They're happy to give you that 5%. That's no problem, right? So you're getting something back in return. And guess what? So now when that reports to your credit bureaus every single month, you're getting a pay in full, or basically a check, a green check, that you paid your credit card bill, even though, and this is a hack, even though that there wasn't a balance from the last month to the next month, you're still getting a check of an on time payment, because there's no balance. You're still paying it, it's just no balance. And sometimes this trips people out, but this is how you can really start to stack up these wins and have your credit score literally climbing. This is how people, me specifically, and other people as well, how you're able to, your credit score goes up when you get credit cards, right? A lot of people think, oh, credit cards are bad, or you can only have, and put in the comments if you've heard this before. It's not good to have multiple credit cards, right? That's a common myth, right? Huge common myth. And I'll break that right now really quick. Think about it. What is credit in its most simplest form, right? What is it? Credit is what? Your ability to manage debt. That's all credit is, right? Or to break it down even further, your ability to pay something back or pay something off in a amount of time. That is what credit is. So once we understand that, that old concept makes no sense. So if the main concept of credit is managing debt, or being able to manage available available debt, then why is it bad if I have more to manage? If I'm able to show, that's why people with ten lines of credit, doesn't have to be a credit card, just be 10 lines of credit. That's why that credit score is so high, because what? They're showing the ability to manage a lot of available capital to them, right? And they have a high credit score. That's how that works. So that myth is killed right there, that multiple credit cards is bad. It's not true, right? So now we've learned this simple part of leverage, right? So you might say, hey, LaJuan, how does this tie into a business? How does this tie into credit, right? So maybe you're a real estate investor. How does this tie in, right? Well, this is how it ties in. And my mentorship group, they notice I preach this so much, but relationships, right? This is why this is so important. You want to Banking is relationships, right? Business is relationships, right? I think we look at relationships from, like, just on a personal level, but credit in business is relationships as well. You have to start thinking about it like that, right? So think about it on your personal side, and I love to leverage personal credit to get business credit, right? That's the easiest way, in my opinion. A lot of people like to go try to get business loans, and you from our real estate people, hard money loans, and Gator lend, all this stuff, right? When you can just leverage your personal credit and get business credit cards for great, you can get most of the money, if not all the money you need, like that, right? So on the personal credit side, you're building this relationship with the bank, right? Let's use Chase for example, right? Say you got some Chase credit cards and you're applying these methods that I'm talking about here today, right? You're applying these methods. So guess what? Chase is gonna be like, well, hey man, on this personal side, they great. Like, everything is good. Like, you got great history, right? Chase is a lender that has internal algorithms, right? I talk about that a lot, but they have internal algorithms. Chase does that. Basically, your say your FICO score is like a 705, say it's a 702. Internally with them, based on your behavior, based on how the relationship is with you and Chase, as an example, your internal score with them could be at 800. Well, guess what that means? They're gonna be willing, and so to speak, bending over backwards to be able to hand you capital, right? So think about that. You're applying these strategies, right? And you have these high internal scores with them on top of you already having a great FICO score. So guess what? When you go to get a business credit card, all right, or even even if you were talking about a loan, we could throw that in there. I don't recommend those, but we'll throw those in there for conversation purposes. Even if you're trying to get one of those, if your personal relationship is that good, do you think you're gonna have a problem getting a business credit card? You're not. You're not, right? At all. And you might say, "Hey, man, I don't believe you, man." That's fine. I'm proof. Like, I've gotten 300K in capital using these exact strategies that I'm talking about right now, right? You might say, "Well, hey, it only works for you." I got plenty of people, and I'll send you guys a link. You can check it out for yourself. That I've done the same strategies that I'm talking about. DeAndre, if you're still in here, he can pop in the comments and tell you he not lying. He just met me, got in the mentorship group. He just did it. If he's watching, he'll pop in the comments and say he not lying. So what I'm saying works. It's simple stuff, but you just have to know what it is, right? DeAndre, thank you. Yes, sir. 17K. No interest, by the way, right? No interest. He's not paying any interest. That's 17K no interest capital he got, right? Just following these strategies that I'm talking about, right? So this stuff works, right? It really works. And I want to touch on business credit cards for a second since we're kind of talking about that. Business credit cards, in my opinion, are the best way to fund a business, right? And I'll tell you why. Once you get that old mindset of credit cards out of your head, it'll make a lot of sense why business credit cards are, right? Because when you first say that and you don't have an understanding of credit cards, you're like, oh, a credit card. Why would I don't want to use a credit card to fund my business. That's old mindset because we're thinking about, oh, let me go get a business loan. Let me go get a net 30, a net 60. Let me go build my Duns numbers, right? All these old strategies. Let me go get a hard money loan, right? And let's talk about that for a second for my real estate people. Hard money loans or any loan for that matter. So think about it. Why? And I preach no interest, right? We've been talking about that. So why would you go to a bank, right, and ask them for, let's just say 50,000, right? We'll just throw that out there, random number. Or would you go to a bank and go ask them for a $50,000 loan, right? And you have to pay 12% interest, 10% interest, 15% interest if your credit's not that good, 18, right? You're starting off in the hole. So you got to pay the interest rate, right? And as we know, loans are a one-time thing, right? You get that loan, you got to pay that back plus interest. And once you pay it back, that's it. It's done. It's over. If you want to be able to use that money again, well, guess what? I have to go apply for another loan, right? And let me know in the comments if you've tried to go get a business loan before. If you've tried hard money loans from our real estate people. If you tried home equity loans from our real estate people, right? If you've tried DUNS numbers, trying to build your DUN numbers. If you tried authorized users, if you tried net 30s, if you tried net 60s, all right? Let me know in the comments if you've tried these things, right? And I'll touch on another thing from our real estate people as well. Investors, right? A lot of people try to go get investors, right? Angel investors, all these type of investors, crowdfunding. It's very popular right now. Well, why does that not work, LaJuan? Well, it's simple. Think about it. Think about it in its most simplest forms. Why would you be willing? Because as an investor, they're gonna want probably 20% of your profit margins, 15% of your profit margins, 30% of your profit margins, right? So why would you be willing to give up 20, 15 to 30% of your business on top of having to pay back whatever that they loaned you? That's an investor, right? That's the investor. A lot of people like they want to try to go that route, right? Why would you do that when you can use the strategies that we're talking about here today that you don't have to ask anybody, right? It's all what I'm talking about here today is all algorithm, is knowledge. If you can play the game right, they're gonna give you the money. It's that simple. It's tried and proven, right? So if you need $50,000, if you need $80,000, if you need $20,000, if you need $10,000, right? This method works. $100,000. This method works for that, and it's easy. DeAndre, let the people know how fast you got that money in the comments if you're still watching. Let them know. It doesn't take that long. If you apply these strategies, and for the people that already have good credit, you can implement this and have this money in a week, if not less, right? This stuff is so simple, but we just have to know how to do it. And these strategies that we're talking about here today, this is what the hedge fund owners do, right? This is what the multimillionaires do. These basic concepts and this stuff that I'm talking about here today, guess how I learned it? From somebody that works on Wall Street. So this is what they do. DeAndre, 3 to 5 minutes. Let me know in the comments if you would like to get 17K 0% interest capital in 3 to 5 minutes. Let me know, because this is real stuff. This is what people are getting, and this is what people are able to do applying these strategies, right? It's simple stuff. And it gets fun, right? When you can play this game, and my mentorship group knows this. I preach this a lot. I want everybody that's watching this today, and then people that's gonna watch this in the future because it's gonna be on my channel. But the people that are watching this, you can be your own bank. I want to have you to the point where you don't need to go get a business loan. You don't need to go get Gator lending. You don't need to go ask an investor. You don't need to pull money out of your 401k. You don't need to pull money out of your savings account. When you can do this, you can repeat this process back to back to back. And guess what? That card, that business credit card that you can extract the capital from, right? If you're in real estate, you're like, well, it's a credit card. How do I get the? You can do it, and without paying any cash advance fees. 'Cause I know that's what you're thinking. Well, it's a cash. No, this is what we do. We abstract the capital from that card and cash in your bank account if you need it to go, put in escrow from our real estate people. This is a thing, right? People are doing this, and I teach this in my mentorship group. But um, this stuff is stuff that, again, we're not taught in school, right? We're not taught this stuff, right? We're not taught how to form an LLC. So for all this stuff, right? We're not taught this. So we have to be willing to go seek this information out. And if you're a business owner, you always should be in an information stage, a learning stage. Always. There's never a point where you know it all. Never. Because things are always evolving, things are always changing, right? Always. So, and I can go on and on about this stuff. We're gonna wrap it up here because it's so much information, right? And if you knew all this, great. If you didn't, and it's like, wow, you could put that in the comments. But um, you know, here's what you can do now. Because this stuff that we've talked about here today, like I said, it's simple. It's simple stuff, but it is a strategy. It's a blueprint, right? So what we're talking about here today, and we know what's going on right now. Inflation is high, right? Gas prices are high, grocery prices are high. But here's what I'll tell you right now, here today. These banks are real loose. I don't know why. I don't know why. I don't know why. But these banks are really loose right now with capital. They're handing it out like candy. Is that going to last? Probably not, because things are coming down the pipeline to where the banks are going to tighten up. And that's just how it goes. But as of right now, they're loose. They're really loose, right? For DeAndre, right? And I got plenty of people, Dimitri, I think he's watching this, 50K, right? So for Dimitri, because he's in here, or DeAndre, he's in here right now, right? So with him, right? He had no relationship. He had great credit, but he had no relationship with this bank, right? And he still got the money. So this is what I'm talking about. They're really loose right now. So if you're in a position, right, and we talk about this all the time, this is the time right now. Right now is the time to be able to change the trajectory to the trajectory, excuse me, of your family, of your life, of your future, whatever it is whatever the end result is for you. This is the time right now. Like I said, these banks are really loose. They're handing out the capital. So if you're in position to do something, it's the time is now. If you're maybe your credit's not that good yet, the time is now to fix it, to get it good. Because it's just strategy, it's just consistency. That's all it is, to fix it if it's not good, right? And if it is good and you have a plan, you have a business, or you're looking to start a business, the time is right now to get this capital. They're handing it out. They're really handing it out. So To wrap this up, and we can do a quick Q&A, 5-minute Q&A here if people have questions that are watching it right now. But the time is now. The time is now. If you want to learn more information about this, if you want to see how we can actually help you with this stuff, if you want like more coaching on this, right? I'm gonna put a link in the comment section in the chat where you can go ahead and book a call with us, right? Totally free. It's a strategy session. We'll sit down with you. And if you already have a business, great. Or if you're a real estate investor, even better, right? Whatever it is that you do, we can help you. And then, like I said, we'll sit down with you, strategy session, see where you're at with your business. If you already have it and it's running, see where you're at. If you're an investor, we'll see what type of capital you need, see what strategies we can implement to help you get to that, right? So I'll put that link in the chat here in a second. But like I said, we're going to open it up for a quick Q&A. If people that are watching have any questions right now, you can go ahead and shoot and ask. Okay, Melina, how to quickly build credit with a 500 credit score? Great question. So, um, this I have a video on this on my channel. Actually, I just made it. I think like a week ago or so. It's how to fix bad credit. So we'll kind of go over some like quick little hits for that. And then to give more information about it, you can watch that video too. But it depends on why your score is that way. That it could be a multitude of things. It could be collections, late payments. It depends on what it is, right? But first, we have to break credit down in its most simplest form, right? So, and this is where a lot of people get hung up, right? The biggest chunk of your credit score is basically payment history. So that's why collections kill you so bad. That's why charge offs kill you so bad. That's why late payments kill you so bad, is because of that, right? So if you have one of those things or all of those things, right, the first thing to do is to tackle that, right? And so when we tackle that, this is how we want to do it. Now, if you have collections, I'll speak on that, and then late payments, I'll speak on that too. So, because those are usually like the two main things. So, collections, right? You want to reach out to the collection agency first, right? And so what you want to do with that, basically, you want to reach out to them and ask them, like, say, hey, if you're able to, right, you can set up a payment arrangement with them. Now, the only way you're going to pay them is if they agree to delete the file from your credit report. So a lot of people get hung up on this, right? So they'll pay the company, right? But they don't get that in writing. And this can be in writing via mail or email, either one, right? But you want to get in a verbal agreement from them, a verbal agreement and a written agreement from them, if you're going to do this arrangement, that they will delete the collection off your report upon um, you know, being paid in full, right? And because the reason we want this deleted, because them just saying, they say this a lot, them just saying, oh, you'll have a paid in full on, we'll put a paid in full, that does nothing for you. The collection is still there. And so right now, the current scoring model that is being used by 98% of lenders is FICO 8, right? So there's actually two newer models out. FICO 9 and FICO 10 is here as well. But there's only a handful of lenders that are using FICO 9. Wells Fargo is one of them. But there's only a few, right? So most lenders are still using FICO 8. And the reason I say that is because FICO 8 does not care if a collection agency puts paid in full, because the collection is still showing on your credit report. So if you have a collection, your primary objective at all times is to get it removed from your credit report. And so the first easiest way to do this is to reach out to the collection agency and see if they'll do a pay for delete, right? And if they are willing to do that, some of them are, get it in writing, be email or mail, either one. And once you secure that, then you do it, right? And then after they receive that payment, they can delete it in 30 days. Now, here's the next thing on that. If they're not willing to do it, right? You say, okay, and you're not going to pay them. So next, what you're going to do, you're going to follow dispute. And so you're going to follow the dispute with the credit bureaus, right? Directly. And a lot of people like to do this online. That's not the way to do it. You want to do it mail, old school way, right? And the reason we want to do it by mail is because a lot of the laws that protect you are still intact when you do it by mail. When you do it online, that's not the case anymore because there's new laws in place that actually favor the collection agency and favor the credit bureaus. But when you do it by mail, it's still in your court. It's still in your favor, right? So when you're going to actually try to get the collection off and you're going to file a dispute with the credit bureaus, what you want to do is, you're going to send a letter to them, right? And make sure you get this priority mail. A lot of people don't do this. They just send it via mail. You want to get this priority mail. You can do priority mail, or you can do, if you want to pay for expedited and have a signature. I like to do that. It's a little bit more expensive, but either or, right? But make sure at bare minimum it's priority, right? And the reason you want it to be priority is because it has tracking, right? And so by law, um, they have to respond within 30 days of getting that, right? And sometimes they don't, right? But if you won't have that proof unless you have the tracking, right? And so if they don't respond in 30 days, they legally have to delete it anyway, regardless of if it's there or not, or whatever is going on, they have to delete it. So that's why you want the tracking. That's why that's so important to have, right? And so on the next side of that is, once they actually get it, and now when they get it, they're gonna actually go do the same thing to the collection agency. And this is how you trip them up, because when the credit bureau send it, it's the same law. They have 30, the collection agency has 30 days to respond with proof validating the debt to the credit bureaus. And so a lot of times with these collections, the main lender, whoever the main debt was with, they've sold that debt off for pennies on a dollar to whatever third party collecting agency. And sometimes they sell it to another, you know what I'm saying? So it's bounced down the chain a little bit. And a lot of times they might not have the original documentation or the original proof to prove that the debt is yours, right? So when they go, the credit bureaus reach out to them to try this. If they don't have it, or sometimes they don't even respond. And so this can help you out tremendously, with getting collections removed. So like I said, if you want more information about that, I did an entire video on how to fix your credit, so definitely check that out. But yeah, that's one way right there. If you have collections, is those two things I just said is really effective. Should I focus on building credit or my credit management first? Honestly, both. They actually work hand in hand. Honestly, Melina, you can do both at the same time. Because what I was saying here today, as far as that's credit management, right? You getting in the habit of, if you don't already, knowing your budget, knowing uh, your monthly spending, and from there finding cards. And so if your credit is not good right now, doesn't matter if it is or if it's not. If it's not, then a card I recommend you to try is the Discover It Chrome Secure, right? So, secure credit card is just, you're putting the money up. That's all that is, right? So if you're able to get that, I would get that. Start with, like, whatever your budget allows, $200, $200, $500, whatever, right? Whatever you can do, get that card. And that's literally the best secure card on the planet right now, is that one, because that's the only one, as of today, as of this video shooting and airing, that you can get rewards. Like, that's unheard of, getting rewards for secure cards. So that particular card of Discovery is secure. It gets you 2% cash back on restaurants and 2% cash back on gas, right? So that's perfect, right? So that you get that card if you're rebuilding, and you can start to use that and get in the habit of the strategies that I'm talking about on this training here. And then, like I said, at the same time, you can be, building, right? And repairing it if that's what you need to do. So I hope that makes sense. So yeah, we are gonna go ahead and yeah, absolutely, Melina, absolutely. So we're gonna go ahead and wrap up. So like I said, in closing, financial literacy, financial independence is time. The information is there, ladies and gentlemen. The information is there. I will see you. I'm gonna put the link here in the chat um, right now, Melina. I'm gonna put it in the chat. Give me 1 second. Um, the time is now. The time is now. Like I've been saying, the time is now. If you're a real estate investor, if you're a business owner, if you're looking to start a business, you need capital. This stuff can get it for you. I guarantee you. We guarantee it. we do. So it works. Like I said, this stuff literally works. It's game changing stuff for you. Right? Game changing. So I'm gonna put the link here for anybody that wants to book a call with us, sit down, look at your situation personally, and see, you know, what we can do, what the process looks like as far as getting going, right? And doing this. Because like I said, the time is now. These banks are really loose. Like I said, I don't know why, but they're really loose right now. They're supremely loose. And so, for anybody that's tried to get a business loan before, they're gonna ask for your firstborn son. They're gonna ask for a whole bunch of documentation from your business. They're gonna ask for just so much stuff, right? And who wants to go through that? Like, who wants to go through all that hassle of you know, having to do that, right? So there's an easier way, there's a better way. I just put the link in the chat for the people that are interested. Melina, for whatever that with the application process, just go ahead and do it. You're good. Don't even worry about it, what it says. So for you. But anyway, um, yeah. So like I said, for the people that are watching, if you're a real estate investor, 'cause that's really who I'm talking to right now, and business owners as well. It works for you too. But I know a lot of people that are getting into real estate right now. It's a super big thing. And if you're looking for capital, right? If you don't know where to go, you know how to start it. You're thinking about you trying to use your own personal funds. This way is better. Leveraging your personal credit to get business credit is better. I promise you. It's a lot better. It's a lot better. So the strategies that I'm talking about here in this video will definitely help you. It'll get you on the right track. And like I said, you can watch, if you don't want to book a call yet, you can just watch a lot of my videos on my channel where I talk about this stuff in more detail. All these credit cards that you can get on the personal side. I talk about business credit cards that you can get to learn to start to implement these strategies inside your business or inside starting to invest, right? Whichever avenue that you're trying to go down, right? But like I said, these strategies are here. Definitely appreciate everybody that was on live today. For the people that watch this later on, appreciate you. And yeah, if any final questions, I hang up for like another minute or two before we shut it down. All right. So yeah, I think we are good. So like I said, hit that link in the chat if, like I said, you want to book a call with us, learn more about these strategies in more detail, and see exactly how this can help you fund your next investment property, fund your next business idea, fund your next venture, or fund your existing business as well, right? Whichever court that you're on right now, this can help you out. So like I said, hit that link, rewatch this video if you need to go back and hear what I was saying earlier. It's going to be on my channel as well. So, like I said, looking forward to it. If you do book a call, speaking with you, helping you out, getting you going. And yeah, we're out of here. We're closing it down. So you guys have a good rest of your Saturday. Appreciate y'all. And we out.